Title: The Labor Market Symphony: Impact on Stock Performance and Sector Dynamics. Introduction. In the intricate dance of economic forces, the labor market emerges as a powerful maestro, orchestrating movements that resonate across various sectors and reverberate through the stock market. The performance of certain stocks and sectors is intricately intertwined with changes in labor market dynamics, reflecting shifts in employment patterns, wage trends, and workforce composition. To comprehend the symphony of these interactions, one must delve into the multifaceted relationships that underscore how changes in the labor market can wield a profound influence on stock performance and sectoral dynamics. The labor market as a barometer. The labor market serves as a barometer for the overall health and vitality of an economy. Changes in employment rates, wage growth, and job market trends are not only indicators of economic well-being, but also catalysts for shifts in consumer behavior, corporate strategies, and investment decisions. As such, monitoring labor market dynamics is essential for investors seeking to discern the potential impacts on specific stocks and sectors. Consumer discretionary and the pulse of employment. One of the most direct impacts of labor market changes is felt in the consumer discretionary sector. This sector encompasses industries such as retail, hospitality, and entertainment, where consumer spending is contingent on disposable income. When the labor market is robust, with low unemployment rates and rising wages, consumers tend to have more discretionary income, fueling spending on non-essential goods and services. Companies within the consumer discretionary sector often experience increased demand during these periods, translating into positive stock performance. Conversely, during economic downturns or periods of high unemployment, consumer spending within the sector may contract as individuals tighten their belts and prioritize essential expenses. Investors navigating the ebbs and flows of the labor market must be attuned to these dynamics, recognizing that shifts in employment can be mirrored in the performance of stocks within the consumer discretionary sector. Technology and the evolution of work. In the 21st century, the technology sector stands at the forefront of transformative changes in the labor market. The advent of automation, artificial intelligence, and remote work has reshaped traditional employment paradigms. Companies within the technology sector, especially those at the forefront of innovation, often benefit from these shifts. Consider the surge in demand for collaboration tools in cloud services during the widespread adoption of remote work. Technology companies providing these solutions experienced a boon in revenue, reflected in positive stock performance. Conversely, companies heavily reliant on outdated labor-intensive models may face headwinds in adapting to the evolving nature of work, potentially impacting their stock valuations. Healthcare and demographic trends. The healthcare sector, deeply intertwined with demographic trends and population dynamics, is significantly influenced by changes in the labor market. As populations age and healthcare needs evolve, the demand for healthcare services and products undergoes substantial shifts. For instance, a growing and aging population may lead to increased demand for pharmaceuticals, medical devices, and healthcare services. Companies operating in these subsectors may experience heightened stock performance as a result of changing labor market dynamics. Conversely, economic downturns or widespread unemployment may prompt individuals to prioritize essential healthcare expenses, potentially impacting certain healthcare stocks. Financials and the credit landscape. The financial sector, including banks and lending institutions, is particularly sensitive to labor market changes. employment stability is a key determinant of creditworthiness, influencing borrowing patterns and loan repayment dynamics. During periods of robust employment, individuals may be more inclined to take on loans for home purchases, education, or other investments, positively impacting financial stocks. Conversely, rising unemployment rates or economic uncertainty can lead to a tightening of credit markets, affecting the performance of financial stocks. The 2008 financial crisis serves as a stark example of how disruptions in the labor market can cascade into the financial sector, causing a ripple effect that reverberates globally. Energy and industrial sectors, infrastructure and employment linkage. The energy and industrial sectors share a symbiotic relationship with labor market dynamics, often reflecting the state of infrastructure projects and manufacturing activities. During periods of economic expansion and increased employment, demand for energy resources and industrial products tends to rise. Companies operating within these sectors may experience enhanced stock performance as a result. Conversely, economic contractions or declines in employment may lead to a slowdown in infrastructure projects and manufacturing activities. Companies within the energy and industrial sectors may face challenges during such periods, with potential implications for stock valuations. Conclusion. In the intricate tapestry of the stock market, changes in labor market dynamics act as a powerful undercurrent, shaping the fortunes of specific stocks and entire sectors. Investors, armed with an understanding of these interconnections, can navigate the complexities of the market with greater insight. Whether observing the consumer discretionary sector's responsiveness to employment trends or the technology sector's adaptation to evolving work patterns, recognizing the symbiotic relationships between labor dynamics and stock performance is essential for crafting informed and resilient investment strategies. As the labor market continues to evolve, investors who harmonize their investment decisions with the changing cadence of employment trends are poised to navigate the markets with a symphony of success.